Good evening, everyone. This is Joseph Trevisani. Good afternoon. Hello, everyone. Good morning, good afternoon, and good evening. The traditional greeting. This is Joseph Trevisani from Worldwide Markets. I thank you all for joining. Today's topic is sterling and its crosses, not meant to be anything more meaningful than that sterling has several crosses. As always, if anyone has any comments while we carry on our discussion, please type them into the chat, and I will be glad to take some time out and answer them. As always, I prefer to make this a participatory effort rather than simply a lecture on my part. Okay. It is very difficult to talk about the currency, the British currency, the sterling, without talking about the possibility that the British people, in advent of what the Athenians would have called direct democracy, will vote on a policy of enormous national importance. And that, of course, is the infelicitously named Brexit. Surely some of our brilliant European and continental and British journalists can come up with a better shorthand than Brexit. It sounds like a breakfast cracker, but at any rate. It is, I think, interesting that we see that the British government is putting, in the person of David Cameron, has decided to put this question to a referendum. The British system, as ours here in the United States, and as most systems are, democratic systems of the world, is a representative system. It's not direct democracy. We vote for representatives, members of parliament, senators, House of the Representatives, whatever the system is, whatever their names are, who then go to the Capitol, make laws, vote on policy, affect democracy. It's a representative system. Now, for the Athenians, 400 BC, direct democracy was possible because there were a very small number of male citizens who were allowed to vote. Maybe 15 or 20,000 at the most in Athens' heyday. And they could actually all assemble, or most of them, in one place and vote. For the many, many years after the demise of the Greek city-states, until the advent of the internet, that was in fact no longer possible. I suppose it could have been done for many years for mail, but it seems very impractical. So for the founders of the United States in the end of the 18th century, the only practical solution to democracy was, of course, representative democracy of the type pioneered by the Romans in the Senate. We've come to a point, which I think is quite interesting in the technological evolution of mankind, where direct democracy is once again possible. Just take, for example, the ability, the power of waging war. If at any time between the Athenians and the internet, maybe not the internet, but certainly the advent of modern mass communications, it would have been very difficult for any nation anywhere in the world to have a referendum on war simply because of the amount of time involved. Yes, once radio and telephones were invented in the early part of the last century, you could actually have had people vote, because they would have been able to be informed. But the logistics of it make it very difficult. But what has changed in the calculation of the government in England in the United Kingdom to put an enormous, probably the most important policy decision that the British government has faced since the Second World War, or at least since the dissolution of the British Empire, which was not really under the control of the British, but under the control of their colonial subjects and what they chose to do. After all, if the Indians had wanted to stay within the British Empire, I'm sure the British would have let them. At any rate, the most consequential government decision in Britain since the Second World War has been, one, joining, you could say three, one for economic sense anyway, joining the EU, staying out of the EMU, that is the euro, and now, June 23rd, a little more than a month away, whether or not to leave the euro. Whether or not to leave the European Union. This is the type of decision, as with joining the European Coal and Steel Pact, as in staying out of the euro, as in joining the European Union. For the past 2,000 years, 2,500 years, is a decision that has been handled by the government, period. As a representative function, the people have a voice, but it is distant. After all, governments often do things that the majority of the population necessarily does not support. No examples. So interestingly, the British have decided to put this to a referendum. This is, without doubt, a rather stunning development. For all of the countries that joined the, I'll talk a little bit about those topics as to what the pluses and minuses, you could say, are of Britain leaving the euro, leaving the European Union are. It's an interesting discussion. It's a fascinating discussion, actually. But what's also interesting is the way that public commentators approach it. Almost everyone you read, except for a few, the vast majority say, "Oh, leaving it will be a terrible idea." And the arguments that they put forth are very interesting, but I will talk about that in a few minutes. So the British have, if you look at the, let's do one thing at a time. I know I have a tendency to jump all over the place. So David Cameron and the Conservative Party, the Tory Party, have decided to put this particular question to a popular vote, to a referendum. You can look at this in a number of ways. One is that they feel that in the modern age, it is the right thing to do. That may be so. Another way to look at it is that since the Tories and the entire British establishment, not the entire, but the majority of the British establishment, certainly the people in power, support staying in the European Union, that this is simply a twofold, how shall we put this, a twofold bet on victory. One, they think that they'll win the vote. No doubt that is true. People and populations largely being very conservative in their desire not to have things change. And in the current situation, although there are economic problems in Europe that the EU and the ECB and European governments seem incapable of dealing with, that it's not nearly bad enough to force the majority of the British population to vote for something which would be a leap into the dark, to use a cliche. And the second one is that the British government is very aware that if they win this vote, then they will have an unassailable position to stay within the EU. There is no way, after having a vote like this, it's going to be very difficult to reopen the question as to what that is. So the approach to it and the British use of what is essentially direct democracy. It's like if the United States, if we had put a vote in 2003, whether or not to invade Iraq, it's exactly the same type of momentous political decision, political economic decision. Fascinating, but it's not something we've done. The British are doing it. I find it very interesting. The European Union, bureaucrats and others cannot be terribly happy about this, although I'm sure they feel pretty secure at this point that the British will vote to stay. They're not overly in love in Brussels with democratic processes, certainly not with putting these types of questions to a vote. One of the very few times that they have put various questions on whether to join the Euro to votes, they've often failed, and they've been very reluctant, and probably rightfully so, to do it again. So we have the British voting in 3 weeks, no, in 5.5 weeks, almost 6 weeks, I guess, on whether or not to stay within the EU. So what are the arguments inside? The reason I'm talking about this as far as sterling, because it is the most, you know what, let's put up a sterling chart here. Hold on one second. I'm going to give you a sterling chart. I don't know if you guys can, do you guys get to see me when I, this is a year, let's put up 6 months. Okay, this is a 6-month sterling chart. Not a whole lot of trend here, a very gentle uptrend, although pretty decent if you are long the sterling. Anyway, I just want to leave that up for a bit. So the reason we're talking about Brexit, you know, I'm going to refuse to use that term. I don't like it. It's like some of the bridges that get renamed around New York City. I have decided, and my children want to know why, that I'm not going to use the new names because I don't like them. And they think I'm rather silly. And I suppose that's true. So British exit is the most important topic from now until, of course, June 23rd for the sterling. The reaction will be uniform, and if the British vote to leave, no doubt the pound will plunge. So there really isn't any other topic. I know this Thursday the British, the BOE has their policy meeting. They're not going to do anything. Nobody's very excited about it, on and on. You can see, as always, with the RSI, which actually is simply a measure, as I've mentioned before, of the tendency to revert to the mean in almost any traded market. The reason simply being, nobody makes any money unless it goes back the other way. Okay, so for the EU and whether or not the British should stay, I have an example of a well-known economist, a man named Robert Samuelson. I'm going to quote some of his arguments only because they perfectly state the corporate standard conventional view for staying within the EU. The basic argument for leaving, of course, is that it will damage the British economy. The EU absorbs 44% of British exports. It is possible that the EU will erect trade barriers, although it's very, in my opinion, unlikely. Why? Because everybody belongs to the World Trade Organization, where they're not supposed to do stuff like that. Another argument is that Britain is treated by the world, i.e. the United States, as, and I don't mean to equate the two, but I'll tell you what I mean in a second, as a very convenient an accessible entry point for the European economic zone, which is in fact the largest economic grouping in the world, larger than the United States and larger than China, which if you count the entire EU, that's 1, 2, 3 as far as GDP goes. And that would possibly be at risk for, in other words, we do business in Europe and we're licensed in Britain. That means because we're licensed in Britain, we have access to the rest of the European Union for our products. And that is a pretty standard benefit towards companies, ourselves included. And that might very well suffer if the European Union, if Britain left the European Union. I don't particularly buy this argument either. Because in order for that to be true, even if English was not in the EU and you had to get separate licensing to participate in the European Union, most countries already have, most companies already have that type of separate licensing, because although the EU bureaucracy is ever growing, ever more regulatory, opponents of the membership would say ever more not quite dictatorial, but ever more immune to democratic processes. Nonetheless, in order to operate in Germany, you still need German licensing. So you don't actually get as big a benefit being in the UK as you do from actually being in the particular country. So it seems to me that the statement that the European market will become inaccessible to countries operating just from the UK is not true, because it's not true now. I've always thought that the largest benefit for American companies, at least, and Canadian companies, Australian companies, New Zealand companies, the Anglo world, the Anglo-speaking, the English-speaking world, for access to the continent is simply the cultural ease of doing business in Britain. Everyone speaks English. The systems are, the legal and financial systems are very conversant, and it's simply easy to go there and do business. Having been to the UK many, many times and done a great deal of business there over the years, that's certainly true. So another issue that opponents of Britain leaving the European Union is that the World Financial Center, and certainly the European Financial Center status of Britain will be threatened. Another argument I do not buy. The reason is very simple. Throughout the period of post-war development, London, which has a history of being the World Financial Center, certainly in competition, but for many years ahead of the United States in New York, my hometown, is that it was so before, it is so now during, and it would be so afterwards. There has now, I remember a push supposedly for Frankfurt and then Berlin to be the world, to try and take financial market business from London. Got nowhere. Britain is a world-girdling country now, mostly through its culture, but nevertheless, much more so than any other place. London's status as the World Financial Center is not about to be threatened by Paris, Prague, or Moscow, or Berlin. Despite the economic export prowess of the Germans and German products, I don't see any possibility that if Britain leaves the European Union, that the financial market business gets up and leaves Britain and goes exactly where. The only place it would go would be the United States, it would be New York. So I don't think that is going to be an issue. And for the United States, and for New York financial business, of which I've been a part of in a very, very small way for many years, I don't see that to be a threat. So the main argument against the British leaving the European Union is quite simple, and that's volatility. And it is the unknown. And how this would play out, no one has really any idea. The British government, if the vote goes through, would have to start planning for it. All of the European, British, American, everybody else, countries who use Europe, who do business in both places, would have to plan for it. There would undoubtedly be a high cost, financial cost, and nobody really knows how that would play out. So the uncertainty involved, I think, is probably more of a risk than anything else as far as specific loss of business or anything like that. And this is the standard argument from everybody who says that they should stay. Now, what are the complaints in the conventional view? What are the complaints that Britain has against the European Union? First one, again, I'm quoting Robert Samuelson, who's an American economist, I believe a Nobel Prize winner many years ago. The first is that the regulations and the regulatory structure, the bureaucrats in Brussels, are ever busy little ants that they are, churning out regulations. After all, what is it that bureaucrats do? They don't make anything. They don't take risks. They don't found companies. They don't create jobs. What do they do? Well, primarily they turn out, they do have a product. Let us not say that they don't have a product. The product is regulation. And the purpose is spreading their regulatory view, their wisdom, as embodied in regulations, throughout the whole world. Well, the EU gnomes in Brussels are very, very busy little gnomes. They are pouring out regulations, many of which Britain has to comply with, regardless of their own regulations passed by Parliament, which means, of course, by the people, since Parliament is their representation. And that certainly detracts, abrogates, negates aspects of British sovereignty. It says that here on some issues, and I don't know which ones, the European Court of Justice can overrule British courts. I don't know exactly how extensive that is. So the first argument is that Britain loses sovereignty, and there's no doubt about this. It's not really a question. The real question is, how far will this be permitted? And the answer really is, as long as it continues, it is guaranteed to attempt to take more and more power and more areas under its control. This is what, in fact, bureaucracies do. It is an iron law, in my mind, of human society. And it's certainly something that does not require any more than a cursory reading of history to prove to be true. So it's not really only a question of the current state of regulations coming out of the EU affecting Britain, but it is, and we should not forget this, no doubt true that this will continue and will increase. It is not enough to view the current state of EU regulation, but one must remind oneself and remember that this is going to continue and increase. Because as long as they're there, they will gain, and a power will accrete to them. There's no question about that. Okay, let's just see what I've got here. Sorry, folks, I'm just checking something on the chat here. I want to make sure we're all on business here. Okay. Okay. Sorry. So the second point is that Britain that the EU's liberal immigration rules will permit Britain to be swamped with refugees and workers from anybody who gets into the EU, because the EU they have done away with their internal demographic controls, immigration controls, and so once you're inside the EU, you suppose you can go anywhere. We've seen that that's not true. Britain has actually refused to let various migrants into the country, even though they're supposed to. I don't know that that is a legitimate complaint, only because I think that the government in London has simply ignored those EU strictures. Okay, the last one is that Britain has to pay more than it gets in to the EU, and then it gets out of it. I don't know if this is particularly important as far as what it goes. I think the strongest argument against the European Union is the argument of British sovereignty. And we'll see how well that plays. Now, it is interesting that this argument that I've quoted the conventional argument for leaving and not leaving the European Union. There's one that I think that is unstated, and I think it is probably the most important, although it's hard to sense it. Okay, 1 second here, folks. I just want to check something. Okay, let's see what we got here. Okay, the unstated argument for leaving can be put this way, and I think it's the most powerful one that you have. Yes, Britain may have some costs if they leave. Britain will also have some how do you want to put it, access issues as far as the EU goes. But the future question, I think, is one which has not been dealt with. It's completely ignored in this statement of sort of conventional views from Robert Samuelson. And that is, where is the EU, both culturally, economically, and politically headed? Let's take a look at this. I want to show you another chart here. Okay, let me just find it. It's GDP between the two. Here we go. Okay, let me get a better one than that. Okay, this is a 10-year of the three GDP rates across 10 years between the UK, the EMU, and the EU. So this is, I think, the key question that has not been really discussed as part of this. What is the future of the European Union? Arguments on both sides of Brexit talk about specific problems in the here and now. Perhaps they talk a little bit in the future about the continuing encroachment of EU regulation on British sovereignty. But the one thing which is not really quite mentioned, because it's something that can really only be seen intuitively, is what's the future of the European Union? Economically, you can see that the British economy has done considerably better than the European Union, and the various points here. Now, I couldn't verify the European Union GDP. Remember, that includes a lot of the countries in Eastern Europe. such as Poland, which have at least since the financial crisis, have a much faster growing economy than any of the older countries, the older EU members in Western Europe. So if you look at it, you have the UK, 210. You have the European Union as a whole at 1.98, and you have the European Monetary Union at 1.6 currently, and you can see the graphs. Now, remember, those small amounts of percentage across trillion-dollar economies make a great deal of difference when it comes to GDP per capita and all of the differentials for the population of the various countries. Okay, so the one topic which is never discussed is what is the future of the European Union and what do the British do by tying themselves to it? The European Union is a collection, primarily the older European countries there, the older Union members. It's a collection of countries with declining populations. One of the reasons, I think, although it was never really discussed in public certainly, for Angela Merkel's very liberal immigration policy recently, which basically said, give us everyone and we'll take them, is something that's unstated. It's that the Germans need population. They are reproducing themselves at rates far below population replacement. And that is true of almost every other old line country in Europe. It's true in France, although less so. It's true in Italy. It's true in Spain. It's true in Greece. It's true in Portugal, in Luxembourg, in Belgium. All of those countries are not replacing their population with children. Now, whatever you want to think about that, and you can look at it, I suppose, from an environmental point of view and say, oh, this is wonderful. Mankind is the chief despoiler of the planet. Yes, you can. I'm not going to discuss that. But from an economic point of view and from a national success point of view, if you'd like to see the result of a decline in population on the economy, then all you have to do is look at Japan. I've made this case in many other webinars that modern industrial economies have never really faced a declining population. One of the early successes of the Industrial Revolution was in public health, and it in the 19th century, which cut the mortality rate dramatically. Public sanitation, clean water, had the greatest effect on reducing childhood mortality than anything else. We have a house, I've been through, there's an old cemetery near my house that goes back to the early part of the 18th century. And if you go through this, and I've done this to my children, if you go through the graveyard and read the dates and how old the people are buried there are, it's very sobering that so many of the individuals buried in the graveyard are children. It really but it struck my girls very forcefully. So the future of any country is its children, of course. I'm not speaking in some sort of grand emotional sense, just you need population. So Europe, on its current path, and this is one of the reasons behind Angela Merkel's open arms program for Middle Eastern refugees. Germany needs population. France needs population. Italy needs population. Portugal, Greece, Spain, Belgium, all of these countries will soon enter the netherworld of declining populations, as in Japan. And you can see the effect, unquantifiable as it is, on the Japanese economy. The Japanese economy hasn't been stagnant for 20 years only because the BOJ keeps rates low, although that's part of it. The real answer is that the dynamism seems to be leaching out of the Japanese economy. So the question is, does Britain want to tie itself to what appears to be a continent headed for both population and economic stagnation? And this is a question which is never actually discussed because it's very difficult to put a handle on it. It's very difficult to put figures on it. It's very difficult to say, well, how is this happening? And what does it mean? Because in fact, nobody really knows the answer. But it is the unstated question in the approach to this particular vote. Now, is it, well, let's approach it from a different way. What would be the benefit for Britain, even if the Scots get up and then leave, in departing from the European Union? There's a very real question here as to what is the largest grouping of populations, of individuals, that has really worked in the history of the world. If you're going to go grandiose, you got to go grandiose. And that is the nation state. It's tough for individuals, it seems, to feel a loyalty and an identity with any nation larger than that. The various empires of the world's history have not managed to maintain themselves. Now, there is a difference here in time frame. To say that for an example, my favorite, the Roman Empire, was unsuccessful in maintaining the loyalties of its people is dubious. In its greatest extent, from the early part of the first century to around 400, just say, the empire did manage to maintain the loyalty of many of its people for much of that time, and that's 400 years. So if we're talking even about the United States, we're talking 250 years or more as far as existence as a nation goes. The British have a much longer history, but it's clear that even though they were very successful as empire for several hundred years, the empire never adopted its loyalty of the nation state of Britain. They viewed themselves, the Australians, even though they were originally British, as in actual British people. New Zealanders, Canadians, all of them, despite their origins, even less so for Indians and Malaysians and everyone else who was ruled by the Brits at one time. The loyalty did not devolve to the imperial entity. It stayed much closer to home, eventually became that of the nation state. So the idea that an organization such as the European Union will be able to foster an identity as Europeans amongst its citizens rather than Frenchmen or Germans or Belgians or Italians or Portuguese or Spanish seems a dubious proposition. It may be that academics and others, maybe some of us, feel that it should be. that this is exactly the brave new world, the future of mankind. I actually do not buy that, because I think that the identities of individuals is far more emotionally constructed than it is having to do, of course, with our childhood and where we grow up, who's around us, and where we feel comfortable, and the songs we sing, the languages we speak, than it is to impose what is really only an intellectual construct at some later date. So I think that the nation state is likely to remain the chief successful focus of the loyalties of its people. So in that sense, the European Union is not necessarily fighting the tides of history, it's fighting the traditional structure of human culture. Be that as it may. The Soviet Union is another example of this, which attempted to impose an intellectually acquired sense of loyalty. And in the end, the Soviet Union fell apart. Ah, yes, an evolution in consciousness. I'm waiting for that. The Soviet Union fell apart, aside from being an economic failure, because no one was willing to defend it. Because nobody underneath its rule believed in it. And in the end, it just dissolved. That is why the Soviet Union disappeared with essentially no conflict. No one was willing to defend it. Because it had not, over the 70 years of its existence, it had not earned the loyalty of any of its people, any of the people who ruled it. So anyway, okay, so as far as the evolution of the European Union goes, I think this is an issue which the British are going to have to deal with, but it's also one which I think has not really been fully explained. There's maybe no way to do it. But if it's true that the European Union is headed towards economic stagnation, it seems to be at the moment, then there's a real question as to why the British would want to tie themselves to it. Certainly, if you're looking for success, then the European Union, once it evolved and adopted the euro, has not been a shining success. It seems very much now that the euro, as currently constructed, is a negative for almost everybody in the European Union, except for Germany and perhaps France. And if that is the sole, aside from Brussels regulation, those are the two aspects of European integration that are the most telling for other countries in the European Union, and neither one of them works particularly well. As we discussed many times before, the European Union is an entity which is founded in the errors and terrors and horrors of the 20th century in Europe. But there's a real question as to whether that is any particular benefit other than avoiding war. Okay. So as far as the Brexit, I said it, effect on the sterling, let's get a few more charts up here. So let's make a comparison now between what we're seeing in the European Union and other things. Okay, so let me find a good chart here. Okay, we looked at that one already. So let me find another one here. Okay, this is the sterling, and the two central bank rates. Before the crisis, the sterling was trading above 2, almost up to 2.1. As the crisis ensued in 2008 and 2009, the sterling crashed. Of course, all currencies crashed against the dollar. So we don't see too much since then. There has been no rate differential between the Fed, no change in the rate differential between the Fed and the BOE since 2009 until right now. And this, you could say that this particular move here does relate to the Fed rate increase. And I think it probably does, because the assumption had been, although my recent column, what am Eurovision? Eurovision is that song contest that they have in Europe, I think, which I haven't really followed. I haven't been to Europe in like 5 years now. We promised the girls we're going to take them to Paris at the end of this month, but I hate to tell them, I don't think that's going to happen. Anyway, so this change right here, this fall in the euro, in the sterling right here, I think was connected to the, at that point, assumption that once the Fed starts, they're going to continue. My column last week on Friday. Now, FIFA is the European soccer governing body, I think. Is that right? Sorry, I do live in the United States, and although I used to play soccer, football in high school, it's been a long time. And they had some sort of corruption scandal, I think. Anyway, I'm sorry, I'm not completely on top of that. Forgive me. So right here, I think we did have an issue. And had the Fed continued raising rates, at least if it had seemed obvious that they were going to, you might have seen the euro and the sterling continue down. My column last week, which is actually up on Real Clear Markets, a little bit of self-promotion here, as they say on Bloomberg, another shameless plug, is about this. It's that the GDP, it's about how how the non-farm payrolls have followed at a delay US GDP down, and that the Fed can now once again be safely and comfortably data dependent, which they're clearly not, because you have lousy US statistics in non-farm payrolls. And they were bad, and actually I think they're worse than they appear. Because what everyone is forgetting, or at least everyone is ignoring in their promotion, is that the Fed's been pumping the economy with zero interest rates and everything else for 7 years now, and this is what you have. You have very, very little. That corporate profits are down, that the US GDP went from 3.9% down to 0.5%, and we're supposed to pretend that this is not going to have any effect on employment, which I find preposterous. So this small return here, although you get more of a return in the euro, is a reassessment of the Fed's ability to raise rates. I do not believe they're going to raise rates in June. We're going to get one more non-farm payrolls. I believe we'll get May's in the first part of June before this. And if it is anywhere like this month, there's, I believe, not a chance that the Fed will raise rates in June. I've long maintained that I think they're going to have a lot of trouble raising rates at all this year, although since their credibility is so shot, you can look at it two ways. One, they need to restore it, or at this point, why bother? And I think the Fed's going to go with why bother. Okay. So the plummet of the sterling was as much a relation to the safe haven status of the dollar in 2008 and 2009 as it was anything else. Because in fact, the rates were doing exactly the same thing. This is the Fed funds rate. Yes, the Fed started dropping before, but once it got rolling here, everybody went to the same place. All of the central banks are doing exactly the same thing, lowering rates and basically praying. Why are they doing that? Because there's nothing else they can do. Many people on the wilder edges of economic criticism will speak of the Fed and or the central banks as if they are composed of staffs of dunces, and this is not true. It is that within the bureaucratic imperative in which they operate, they essentially ignore what Ms. Yellen and everyone else talks about, macroprudential regulation. If ever there is a piece of bureaucratic verbiage which means nothing, that is one, macroprudential. They ought to be ashamed of themselves saying such silly words. It's like an incantation. I remember starting to read The Hobbit to my girls, and it's like they're a magician. Macroprudential regulation. What are they talking about? Doesn't mean anything. I can't think of any crisis that was ever presented by regulation. The only thing that regulations do generally are prevent the prior crisis from happening again. Okay, but then we come up with another one. Anyway, the only real tool that central banks have are interest rates. Quantitative easing is nothing more than interest rate policy by another means, and so that's why they act. This does not, of course, explain why they then don't act in the reverse when they should. But as far as using interest rate policy, they have no choice. It's either interest rate policy or nothing, because there isn't anything else. Probably one of the most dangerous assumptions that can be made in almost any human state, on any human topic, is the assumption of omnipotence, that the Fed can actually do things to prevent bad events, to prevent things. And over the long run, they can't. And things are much better when a degree of humility is used. Unfortunately, our central bankers seem to have lost all sense of humility, which we and they, in the long run, will have to pay for. Okay, apocalyptic rhetoric aside. So what you can see here, that for the sterling, there isn't a great deal of differential from interest rate policy, as you would expect. Now, remember, it's interesting here that if you talk, the first hint by Mr. Bernanke back in 2013, the old temper tantrum, that the Fed could stop their quantitative easing policies. And of course, you saw here the reaction, from here to here is simply profit taking and lack of terror. It didn't have anything to do with central bank policy. Right here. And here you have the speculation that the Fed will eventually stop this and stop quantitative easing, and the sterling goes up. A Fed which has been pumping money out into the economy, supposedly lowering the dollar, stops that. You'd expect the dollar to get stronger, but in fact, you got the sterling got stronger. So the necessary exchanges between central bank rate policy and the currencies are often, once you have this steady state policy, overwhelmed by what's going on. What's going on here, of course? Of course, you have the European problems as far as Greece and debt and everything else is making the sterling seem much stronger. Okay, let's look at another one here. This comparison between unemployment rates. The UK on the right-hand margin and the European Union on the left. And you can also see the difference there. The UK rate, except for its top, looks much like the United States. And the European Union looks, well, like the European Union. And what's disguised, even in this 10% unemployment rate in the European Union and the European Monetary Union as a whole, is individual rates on various age groups. The youth unemployment rate, up to like 25 or 30, I think they qualify right there. In Spain is 46%. Think about that. not too long. 46%. I have lots of young relatives. They all have jobs here in the United States, around New York. I can't imagine what that is like and the damage that does. It basically robs a generation of its life. It is an utter policy failure, in my opinion, that is completely ignored. But it doesn't matter that, yes, there are social policies to prevent you from starving and leaving a decent life and enable you to get an espresso every morning, whatever. In my view, work is the enabler and enabler of life, if you will. And people need to work. They need to have jobs. So this is that kind of failure is utterly disguised in this. Okay, CPI. Sounded like there was a small animal in the room for a moment there. Anyway, here we have the European Union and UK. Again, a benefit towards the British system. So the three statistics, and you can look at many other, and they all produce the same thing. GDP, unemployment, and inflation, assuming that a moderate amount of inflation is a good idea. I'm not going to go on about my opinion of the Fed and their 2% target. Another story. But by all these traditional methods, you look at the measurement, you look at the European Union, and you look at the UK, and it is a benefit to the UK on that comparison. Okay, so since we're almost going to end here, I want to take a look at some of the technical aspects of the currency trading, which is in fact here, well, this is 1 year. Let me put up the 6 months chart, sorry. Guess we get a better view from the 6 month chart. Okay, so where is this likely to go as far as, say, the next 6 weeks in the European sterling trading? With sterling's at 144.05, I think, when I came in this morning. That's what the charts say. You have a nice pennant formation there that is declining volatility from here. First of all, we have a gentle uptrend, which has not at all been broken. Okay. You have a sharper uptrend since March, April, since about the beginning of April, a little bit more. And then you have a very sharp downtrend. This one looks to me related to the view of exit from the European Union. But at any rate, you have a nice pennant formation here. That is where you get a compression of ranges, which inevitably breaks out. And the question for us, of course, there is it going to break out down or break out up? And you want an answer, of course. My guess is it's going to break out down, because I think we're going to see the same thing in the euro as well. The rise in the euro lately is composed of two things. One, profit taking, of course, the standard answer. But two, it's the retreat of the Fed from its 4-hike position back in December, 5 months ago. We're now down to 2. My guess is after May's non-farm payrolls, we'll be down to 1. And that's in the Fed's own view. If you look at market predictions from the Fed funds futures, you have the interest rate prediction at less than 50% throughout the end of this year. And it doesn't rise until like 56%, I think, in the February meeting. So that's been the largest point on the euro's ascent, is that the Fed, which seems set to raise rates, now seems very much set not to. Now, the Fed has been busy talking about rate increases because they're not going to. And they don't want markets to get that idea. The column I wrote 2 weeks ago, and I'm going to write this week, I think also, unless I'm going to do interest rate policy, is that The Fed is unfortunately in the position with its 9-year-old transparency policy now of attempting to give you a clear view of its policy when the Fed does not have a clear view of its policy. The Fed does not know what's going to happen. In order for them to give a transparent view into their own deliberations, the only way that's worth anything to the market is if the Fed knows what's going on. So it can tell you what it thinks and what its policy will be. But in fact, the Fed doesn't know what's going on, and it doesn't know what's going to happen. And so it's continually in a position of having to speak out of both sides of its mouth because it doesn't want the markets to run away with themselves. It's terrified, apparently, that equities are going to crash. And unfortunately, there are two ways of equities crashing. One, if they raise rates. And two, if they say the economy is so bad, we can't raise rates. So the Fed is stuck. So I think they're reverting inadvertently, perhaps. I don't think they've thought about it in these terms, although I don't really know, to Chairman Greenspan's policy of obfuscation. My favorite and famous quote, if you have clearly understood what I have said, then I must have misspoken. That's kind of a paraphrase. So I think we're going to get probably I haven't seen any recent polls on the British exit, but for most of the next 6 weeks, that is going to be the determinant of where the sterling goes. If you get a poll that comes out and shows the exit of Britain is leading by 5 points, you can be sure the sterling is going to get hit. And if you get the reverse, you'll probably get a boost in the sterling. So I think that's going to be the determinant. So there isn't a lot of technical application in a long-term trend here. There will be, of course, day-to-day. I didn't cover any of the smaller timeframes here because of that. Okay, folks, thank you very much for attending. I hope this was useful. I do have next week's topic up. I believe it is. I don't know if you're going to like this or not. It's a comparison between normal interest rate policy and policy when the policy is at the zero bound between Newtonian physics and quantum physics. I hope I can pull this off. Anyway, we will see you all next week. Everyone have a great day and enjoy the rest of the week. Take care.